I'm now going to go through another exercise for the internal control in cash. In this particular exercise, we would like to review a few situations and try to identify to see if there are any weaknesses in the systems relative to control. And again, before I talk about some of these scenarios, I would like to talk a little bit about the concept of internal control relative to cash. So normally speaking, when we are talking about internal control, the idea behind internal control is really trying to safeguard the assets. We wanted to protect the assets that we have so that we know that whatever we are supposed to have, we actually have in our record and also in our possessions. Definitely the other thing is that normally speaking, we want to make sure that we do have all the correct assets to tie back and validate what we have in the financial reporting that we are going to do. In order for you to do internal control, there are numerous different ways that we always can take into those. One is definitely what we call the segregation of duties, meaning that we should always have different people maybe performing the same line of work. So this way you can track it. You can actually keep track of what's going on and help people more accountable on what they're working on. The other thing is the fact that we always would do bank reconciliations. That would be another way to try to safeguard the assets. And bank reconciliation is something that we'll be going through in some of the exercises. And sometimes we might go ahead and do a physical count of the assets that we have just to make sure that we accounted for what we have. These are just some examples of internal control. So now let's take a look at the questions that we have and see what are some of the issues that we might be dealing with in this particular case here. So in the first scenario here, it says that at a family hardware store, there are 4 sales clerks on duty and they share the same cash drawer. Now the problem here is the fact that all these 3 cashiers are sharing the same drawer, the same cash drawer. So it's very difficult in this particular case to establish any kind of responsibility because they're all sharing the same cash drawer. So basically all the transactions are being mixed up among the 3 of them. So trying to account for whose responsibility it is for those cash management is going to be quite challenging. And also, in this particular case, trying to reconcile the records by each of the salesperson is also becoming quite challenging. So one of the things that we should do is definitely to have each employee having a totally separate cash drawer. Then this way, you can reconcile the cash balance a lot easier by accounting for what's in the beginning and accounted for all the transaction that has happened, so you can come up with an estimated ending balance, which should tie back to what you should have in the cash drawer. If we take a look at a second scenario here, it talks about that at Lion's Furniture Store, most customers would take the option to pay their furniture purchase over a 36-month installment payment plan. These customers send the company checks or cash each month. The accountant opens the mail each day. They make a bank deposit with the money received in the mail daily and prepares and posts a journal entry in the accounting records. Now, as I talked to you about that earlier, we always talk about the segregation of duties, meaning that you would like to have separate people doing more or less the same line of transactions that might be related. In this particular case, the accountant is basically doing all the functions by himself. He's basically opening up the mail. He basically checks the check, takes the check that was actually in the mail. He deposits into the bank, and he also basically prepares all the financial entries that are related to these transactions. So in this particular case, it's a very clear indication that there's no segregation of duty. So normally speaking, what we would like to correct this is the fact that you would normally be one person opening up the mail and then maybe doing the deposit and the deposits of the checks and the reconciliation of the check should be done by another person. And then basically the recording of these cash transactions into the book and accounting for the journal entry should all be done by a third person. Then this way you would have different people being held accountable for different activities on the same line of work. So this way you can actually cross-check each other to make sure they're all accurate. If we can take a look at the third issue here, Lee Convenience Store is a family-owned business which sells a variety of items, including candies, beverages, and stationeries. Mary is a long-term employee who's responsible for ordering all the merchandise, checking all deliveries, approving invoices for payment, and issuing the checks to the vendors. Now again, in this particular example here, it's very similar to the previous one, is Mary, being the long-term employee, is basically doing all the functions by herself without some other person that might be able to check on some of the things she might be working on. At the moment, she's basically taking all the requirements that are needed to be ordered, basically ordering them, checking on the deliveries and approving invoices for payment and issuing the checks. So normally speaking, you would like to have different people doing the work. So as a result of that, you would most likely want to have a person who might be looking after the ordering of the products. You might want to have some other person who might want to inspect on the products to make sure they're all okay and meeting all the specifications that we're looking for. And then you would like to have some other person approving the invoices for payment and issuing the checks to the vendors. And in the very last example here, we have Oasis Springs, which is a bottled water company. They provide door-to-door deliveries to both residential and commercial accounts. The driver is responsible in collecting cash from customers, and they will retain the cash in a compartment until the end of the week, when the accountant will count and prepare a bank deposit. In this case here, it's the volatility here is the fact that the cash driver would collect all the cash, but they would be kept in the drawer in the compartment of the car until the end of the week. Quite a lot of things could happen during the meantime. I mean, the cash could have lost. The driver could have spent the money, or the driver would have taken the money and not coming back to work at all. So the ideal situation would be the cash needs to be collected on a daily basis, and they need to be reconciled on a daily basis and deposited into the bank. And this concludes the discussion of this exercise, and thank you.